This CKNW podcast is brought to you by Destination Toyota in Burnaby, your neighborhood Toyota store.
Well, good morning. We've got a really exciting show lined up for you today. We're going to cover a number of the major markets, starting with Keith Schaefer talking about oil, gas, pipelines, and refineries. At the top of the hour, Michael Levy is going to be here to talk about the gold market, but in particular, we're going to talk about the difference between the paper gold market and the physical gold market. It's a very big difference, and Mike's going to tell you why that's so important as to where the gold price is going. We're going to follow that up with a segment, Richard Elbel, on dividend stocks. You've heard me say in the show before, I divide my money into what I call my short-term trading accounts and then my long-term savings. Richard's going to be talking about the savings account, the kind of account where, you'd be happy to make a good, solid 5% a year with not too much risk. And then we'll get to Ozzie Jurek on the real estate market. And listen, we all know, the elephant in the room as far as the real estate market is concerned is how much debt there is out there, how high prices are, and Ozzie's clearly our real estate expert, has been for years, want to get his views on that and what that means for the real estate market going ahead. But just to get going right now, I think we've got Keith on the line. Keith, are you there?
Morning, Victor.
Keith, thank you very much for being with us here on a Saturday morning. The heart of the matter, in some ways, you and I were talking this week, there's so much going on in the oil and gas industry. But one of the things that I think we want to alert our listeners to is when they are looking at the evening news and they see the announcers say, the price of crude oil is $85. That's crude oil down in New York. The kind of crude oil that we're exporting out of Canada is being sold at a substantial discount to that, and that's got all kinds of ramifications for us here in Canada. Tell us why that's happening.
Well, what's been the big story of the last year, about the last 18 months to 2 years, is the huge increase in supply out of both Canada and the U.S. In Canada, it's mostly been the heavy oil out of the oil sands, but in the States, it's been light oil out of the shale places like the Bakken and down in Texas. And this has just really overwhelmed the entire energy system in North America. So we have too much oil for the pipelines, we have too much oil for the refineries. So all this huge supply is competing for refining capacity, and really it's almost a race to the bottom, Victor. Whoever is willing to take the lowest price wins. And so where we've been stuck in a rotten position in Canada, particularly on the heavy oil side, is that our heavy oil goes down to the U.S. refineries because we don't have a pipeline yet to the West Coast to sell to Asia. So we are missing out on probably $30 a barrel, sometimes even more, by having to ship our oil down through the same pipeline system that's already clogged with a huge amount of increasing U.S. oil. So what that's ended up for us, Victor, is that we're selling oil in the last month for less than $50 a barrel down to the States.
So when people see $85 or $90 quoted on the news at night, that's the West Texas Intermediate price in New York, and our Western Canada Select, I guess, is the bench grade here, trading for around $50 a barrel.
That's the heavy oil. Our light oil is only usually about $10 less than the American price, but the heavy oil guys are really getting hit hard right now.
Keith, before we go any further, I notice here that with the World Outlook conferences coming up at the Bayshore Hotel on February 1 and 2, that you are going to host the VIP breakfast on the Saturday morning, I guess it is, at the World Outlook Conference. And your focus in particular, and I guess we should have made that clear at the top of the show here, is on the junior oil companies. You look for opportunities in the whole energy sector, but in particular, at least the past few years, you've been looking at the junior oil companies. Is that right?
That's correct, Victor.
Okay, and we'll get to more about World Outlook Conference as we go through the show here and why and how people can get tickets and all that sort of thing. But we've got this this Canadian oil that's being sold at such a discount. Obviously, that means less revenues for the provinces, particularly BC and Alberta. We hear the finance ministers here say they're struggling with their budgets because they've got so much less tax revenue. It seems to me, stating the obvious here, that because our major market, the Americans, already have lots of oil and the pipelines to get oil to the refineries are clogged, that we truly need to export that oil to another market, and that brings us to the subject of pipelines or some other transportation. What do you think, given the current political, environmental situation, what do you think the chances are that we're going to have another market to export our crude oil to?
I think it's going to be a long time, Victor. I just see a polarization of the two sides. You've got the government kind of in the middle, shifting in the winds, waiting to see where public opinion's really going to fall, and then you've got a very ardent group of people opposed to the pipelines for various reasons. You have the regular left coalition of First Nations and the environmentalists opposing the pipeline out to the West Coast, and then you've got the industry saying, but we need it. It's costing Canada, billions of dollars a year. Some estimates say $50 million a day. So I haven't seen this year at all any movement towards the middle by either side, and that's a real concern. I think it could be a long time before we see a pipeline to the West Coast, which we need a lot.
And the other pipeline is the Keystone pipeline, which would take the Canadian heavy crude down to the refineries on the Texas coast. Is that right?
That's right. I don't really see that pipeline increasing our oil prices that much because really there's no more refining capacity down there either. So it will just move the bottleneck from Cushing, Oklahoma, which is the big storage space for all the oil in the U.S., down to the Texas Gulf Coast refinery complex. So it's just going to move that blockage, about 400 miles south. I don't see that being any panacea for Canadian oil producers.
So we're talking with Keith Schaefer, and we'll come back here. Keith, we need to take a commercial break, of course, and then we'll come back. And I want to talk to you more about, given this kind of environment, what you're doing to invest in the energy sector. You're listening to Money Talks all across the Chorus Radio Network, making the point that we've got so much crude being produced now, there's just not enough pipelines to transport the stuff, not enough refineries to deal with it, and that's really squeezing the prices that our industry can get for that oil. Keith, you write your letter, and as I understand it, the way you write it is you tell people what you're doing with your own money in the oil and gas, the energy sector. Is that pretty much what you do with your letter?
Yeah, bang on, Victor. I try and lead by example and put my money where my mouth is.
When you and I were talking earlier this week, you told me that there's been so much going on in the energy markets that the price activity, the share prices have been so volatile. You've also said, by the way, to the credit of the people in the industry, that they've been incredibly adaptive as there's been so much change coming at them. They seem to be able to adapt and deal with that and so on. There's been so many breakthroughs in technology. But one of the things you did say, you felt that the oil and gas industry generally has been poor at dealing with, the environmental argument, which seems to be the major block to getting these export pipelines built.
Yes, it's been a bit disappointing this year as the negotiations or general discussion has got more shrill instead of more together, more working together, more collegial. I'm really kind of surprised that the industry on the PR side has not been a little more proactive in trying to deal with some of the concerns. And one story I wrote here just a few weeks ago was on pipeline leak detection technology. So all these pipelines, after a certain amount of time, will start to leak. And, of course, that's one of the biggest issues that people who are against the pipeline have is what would they do when it leaks? Mm-hmm. And as I was doing my research, I kind of realized, wow, the pipeline leak detection technology that's out there is really poor. In fact, it's almost, I would say, non-existent. It doesn't, it's basically flow. So if so much oil goes in, so much oil goes out, if there's a difference, we must have a leak. That's an issue, Victor, where everybody could get together and rally around and say, okay, let's figure out what does it cost, what's the technology that we need, how do we do that, let's start developing it, let's get the R&D going. Like, that's something that all the stakeholders in the energy complex could rally around with the public to say, yeah, let's work on this together and then figure out the best way to do this. And so that's just one example of an issue where I just think the industry misses the boat a bit. And instead of just saying, yes, but there's jobs, don't say yes, but just get together and try and address all this and the challenges that are out there. And of course, that really is incumbent on the other side as well to not be ideological and in their opposition. And that's as big a stretch it is for the industry to kind of move toward the center.
So if there's an inventor out there and you want to become a billionaire and also be providing a great public service, invent some kind of a technology that's going to give us early detection or whatever on leaks in pipelines, and we'll all love you. How about the government just saying, listen, we understand there's concerns and so on, but we're going to do the eminent domain thing. We're going to push through a major highway because we need it. We're going to push through a major pipeline because we need it. Any chance of that happening?
What I'm hearing out of Ottawa is that that's one of the only chances of this thing happening, where the federal government would say this is in the public interest and it's going to go through, and not so much that's that. They're obviously still going to have to consult with everybody, but it's going to become basically something that will take on a lot more importance, be declared in the national interest, and that's what we need in Canada. There isn't much national interest around hardly any issues.
You told me when we talked earlier this week, again, you focus on the junior companies more than other things, but you said, for instance, the pipeline stocks, the share prices of the pipelines have generally done well this year.
Really well. Yeah, they're some of the best performing stocks in the whole energy complex.
Interesting. Remember in the old days when you'd have the gold rush to some district, and you'd have guys out there, and the word was that the people who really got rich were the guys that sold the picks and shovels.
Exactly.
Okay, listen, given your views on what's going on in the energy sector these days, let's talk a little bit about what are you doing with your money. It sounds like, it'd be pretty thin pickings out there, but you must be finding something that you like.
Well, one thing that came to me about middle of the year, beginning of the third quarter, was that, okay, with all this cheap Canadian oil, who makes the money off that? That's where I want to go. You can gnash your teeth and get mad, or you can get even. And I realized that a lot of the Canadian oil flows down through the upper Midwest in the U.S. So, and of course, that's where the Bakken is as well, in North Dakota. So all that whole area in the upper Midwest in the United States, all those refineries there are making huge money because they're able to buy all this Canadian oil for $48, $50 a barrel, sometimes as much as $60 a barrel, and all their refined products like gasoline for driving for cars, for home heating fuel, for jet fuel, all that stuff in the United States gets exported. So it's priced at world prices, so at Brent prices. And so there's such a big discount between the Canadian oil price that they have to pay and the world prices that they get to sell their products for. They are making money hand over fist right now, and it is the perfect hedge for Canadian investors against low Canadian oil prices is to buy the Midwest U.S. refiners. And there's about 5 or 6 of them. They're all fairly large companies. They're not juniors. These are large enterprises. Companies like Tesoro, TSO on New York, Valero, VLO on New York, Holly Frontier, HFC on New York. So these are all quite large companies.
Mm-hmm. And does the component of Canadian oil being cheap and all that, is that significant to their overall operations?
For a lot of them, it is, absolutely.
Okay.
Absolutely.
Keith, I like the way you think. We're talking with Keith Schaefer, and as I mentioned earlier, Keith is going to host the VIP breakfast at the World Outlook Conference coming up at the Bayshore Hotel, February 1 and 2. You want to go to moneytalks.net, click on the button there at the top of the screen, get more information about the World Outlook Conference. I'll talk more later. We just got a tremendous lineup of speakers, including the one and only Frank Gistra is going to be there to take questions about, what he sees in the market, what he's doing, with some of his money. We'll take a commercial break here and then come back and talk some more to Keith, find out what he's doing with his money in the energy sector, given everything that's going on. You're listening to Money Talks all across the Chorus Radio Network. We're talking with Keith Schaefer, and I think Keith's made the point pretty clear here that we've got a problem. In Canada, we're producing more and more oil. I understand the forecasts. We're going to continue to be a world-size leading producer of oil, and we don't have the capacity to export that. Keith, just before we took the break, you were saying, well, okay, you can be mad about it, or you can look around. And I love the way you do that kind of thinking. Who's benefiting from this? And you said, you gave us the names of several of the American refineries who are basically taking pretty cheap crude in the back door, processing it and selling it out into world markets and making good margins. When you and I talked earlier this week, you told me that one of the things that you were doing was looking at making investments in the energy business outside of Canada. Talk to me more about that.
Well, to me, one of the most obvious places to go for the leverage that you like to see in the juniors, which is where I focus, would be the international space, where your discoveries there get to have Brent pricing. So, as we just talked about, that's a very significant difference in profitability and oil price. You look at some of the companies that are producing down in New Zealand, they've got netbacks, which is a profit per barrel metric, of $80 or more. So they're compared to the average Canadian producer, like even some of the best Canadian producers, of $40 to $60. So that's a huge increase in profitability, and there's lots of really neat plays out there in the international arena too. With the shale revolution now being exported around the world, you're starting to see some new discoveries and plays that really weren't on the radar screen at all just a few years ago. So those are the kind of plays that I'm looking for that are, if possible, in politically stable jurisdictions, but with great geology and a proven team.
Okay, New Zealand is one, and Texas, I heard you mention the other day, you got your attention as well.
Absolutely. There is a huge rush of Canadians down to Texas right now. And that's for a couple of reasons. One is that there's a lot of new plays opening down there. The Eagle Ford and the Eagle Bind are two shale formations down in southeast Texas that are really getting developed now and are showing great economics. And over on the other side of Texas is what's called the Permian Basin, which is kind of like the big granddaddy of North American production. It's produced over like 35 billion barrels, been drilled like Swiss cheese. And Victor, even after 70 years and literally tens of thousands of drill holes, they're still finding new shale formations there that they're being able to develop and get excited about. That just stuns me. That's the ingenuity and the adaptivity of the industry on the positive side. So what you're seeing now is a huge move on the Canadians to go down there and take part in that. And one of the other things that's driving it is these new energy trusts that have been forming in Canada recently. We've had 3 new energy income trusts, and of course most of your listeners will remember back in the last decade that was a huge industry here in Canada before Jim Flaherty, the finance minister, said, okay, we can't, it's turning into such a big industry, we can't afford to do this anymore, where they flowed through all their profits to the shareholders. And what they've basically said now is, hey, if you want to do that with somebody else's assets but not Canadian assets, that's okay. So the lawyers and the promoters and the investment bankers have figured out a way to do this and bring them to the Toronto Stock Exchange. And there's 3 on the board right now: Eagle Energy, Argent Energy, and Parallel Energy, that are these income trusts. And so they pay high value for land and production down in Texas. So really high, like $40,000 an acre. Whereas up here in Canada, Victor, it might be like a really good play would be like $2,000, $2,500 an acre. So a huge increase in value down there versus up here, what people are willing to pay, because the geology is so good. So you're seeing this huge flow of Canadians go down there and try and pick up parcels of land and develop them, and then the goal here is to sell them to these Canadian income trusts with U.S. assets.
Keith, we got to cut you off there. I'm really happy you came and we're on the show with us here this morning. I think you're pointing out, some of the problems we got here in Canada, but some of the opportunities that there are in the research in the energy space. You will be speaking, the host, I should say, at the VIP breakfast, February the 2nd at the Bayshore Hotel, the World Outlook Conference. Look forward to seeing you there. And we'll take a break right now. We'll be back with Michael Levy to talk about the gold market right after the news. You're listening to Money Talks on the Chorus Radio Network.